Yesterday, the European currency managed to gain value against the US dollar, while the situation with the British pound was not so positive. The latter remained range-bound. Demand for risky assets recovered amid upbeat data on Eurozone consumer confidence for November, as well as the speeches by President Loretta Mester and Esther George. Fed members continue to talk about the need to pay down future interest rate increases. Investors overwhelmingly expect a rate increase of 50 basis points at the Fed's next policy meeting in December. However, much will depend on inflation data to be published next month and the November rate of price growth. Today's macroeconomic calendar is full of important releases that could have a severe impact on market sentiment. It includes statistics on activity in manufacturing and services sectors. The indicators for the euro area, Germany, and other major European states are expected to decline. This signals that the economy is clearly sliding into a recession, which is not a good sign for the euro. The UK is also set to release similar data. Likewise, Britain's manufacturing and services PMIs are forecast to show falling activity. Against this background, the pound sterling is likely to come under pressure. In addition, traders may take notice of data on US building permits. Notably, the state of the housing market is a key economic indicator. Thus, downbeat statistics will indicate that US economic growth is slowing. That is, the United States may tip into a recession next year. Nevertheless, recent data shows that the situation is fairly stable. Furthermore, it is worth paying attention to US initial jobless claims. The focus of market participants will probably be on minutes from the last Federal Reserve meeting. However, I doubt this report will strongly affect the market. After all, Fed members pushed for a continued aggressive rate hike path at their previous meetings. For a shift in their monetary policy stance, they need to receive the December economic indicators. Nevertheless, if policymakers insist on the need to slow down the pace of rate hikes, risky assets will most likely gain value. And now let's move on to technical analysis. According to the 1-hour Euro-American dollar trading chart, the level of 1.0333 acts as the nearest resistance. A false breakout at this mark will create a sell signal. In this case, the euro will slide to 1.0277, where bulls are expected to make every effort to take the lead. If the price forms a false breakout at this level, a strong buy signal will be generated. If the euro breaks above 1.0333 and tests it from the top down in early trade, it will be possible to go long, continuing on a continuous rise to 1.0382 and 1.0427. At the mark of 1.0427, I recommend going short on a rebound. Short positions at 1.0382 can be considered only amid a false breakout. If bears take control of 1.0277 by late afternoon, long positions will be relevant at 1.0225 on a false breakout or 1.0180 on a rebound, with a view to catching an intraday correction of 35-40 pips. Meanwhile, the British pound remains range-bound. In my view, today traders will be active in their fight for the 1.1900 level. A false breakout at this mark will create a sell signal, thus bringing the pound sterling down to 1.1830. If bulls failed to regain control of this level, long positions on a rebound can be considered only at 1.1765 and 1.1714. In this case, one can count on an intraday correction of 45-50 pips. Alternatively, if bulls are able to protect 1.1830 or break above 1.1902 in early trade amid upbeat data from the UK, the British pound will jump to 1.1964 and even return to 1.2021, a 1-month high. At the level of 1.2021, it would be a wise decision to go short on a rebound. Short positions at 1.1964 will be relevant only amid a false breakout. Best of luck!